let's dive in here with a little bit of news that happened over the weekend when Warren Buffett came out with his annual letter to shareholders. Myles, you were up bright and early
Indeed.
on Saturday covering this, and we're still talking about it because it's still making news. It's still relevant. What were the big takeaways for you?
I think what's interesting is that as much as Warren Buffett continues to write this newsletter, I don't know, maybe you have a different take on this, Andy, but it feels like he's been hitting the same themes for the last 3 years without a whole lot of variation. And, you know, I wrote a post about the American tailwind. He takes a little pot shot at Donald Trump in there, saying that anybody who's bragging about having done it themselves in America, of course, is not really telling the truth. We all know someone who likes to do that. Kind of defending the increased share buybacks that Berkshire Hathaway has done, the authorization that the company now has, continuing to lament the lack of acquisitions or attractive acquisitions, of course, on CNBC this morning, filling in that with some more color, saying they almost did a big deal in the fourth quarter of 2018. We can speculate on what that may have been. And I think just in general, reiterating his view that there are some good-looking stocks out there, but nothing that seems like a fat pitch. But it is sort of where we've been, not just with Warren Buffett, but with a lot of investors who consider themselves to have more of a value tilt. It feels like not a lot has changed since, let's say, 2014 or 2015.
And the reason why, of course, is because the markets have been fairly elevated since then. Yeah. So that take on the marketplace and their investment outlook reflects the fact that the markets have been higher. And so it just makes sense. You know, you want to go back to, say, 2008, 2009, 2010 and lick your chops and say, okay, that's when the buying was done. And you'd think that that would be the case. And of course, it's always hard to do that. Buffett actually does do that. He does walk the talk and gets in now. But it makes sense that, you know, with the market high, he's a little reluctant to dive in.
And just, you know, to kind of put some actual data on that, Andy, you know, he took a big, really big preferred stake in Bank of America back in 2009, 2010, converted that to common equity over the last year. So he has 9.5% of the company, almost 1 billion shares of Bank of America at a cost basis of $11.5 billion. Well, right now the market value is $22.5 billion, right? So he doubles his money on Bank of America over the last decade, but you're not getting those kinds of terms out there, right? That's why Berkshire didn't invest in Uber. That's why they couldn't close whatever deal it was he was looking at the end of last year.
All of that is true, but I do find that we went through the fourth quarter, and you're talking about being at elevated levels. We were not. We had a little bit of a washout, and I think people wanted a little bit of a sense of color there, and especially on Apple. And Myles was referencing the CNBC interview, talking about maybe there was something that was going to happen in the fourth quarter, so people thinking, all right, somebody may be in distress, but also talking about Apple saying he's not buying at these levels, but he would if shares got cheaper. Apple shares are down about 25% since October, up about 20% since last month. I mean, what's your take on what he's saying about Apple here, and even maybe about the washout in December?
Well, the way I took it is that he's concerned about Apple's short-term and medium-term prospects, as he should be. The company came out on January 2nd, massive warning to the market. Now the stock has recovered, to your point, but the company's really up against it. Look at some of these innovations we've gotten the past week from Samsung, from Huawei. Do we know that Apple has innovations like that coming? I'm not so sure yet.
I would say also the one thing about Q4, and you know, these guys, well, let's just stick with Buffett. He's a pretty nimble guy, but you know, that was pretty quick. And you know, usually you need like a quarter or two, a couple quarters, and then like, okay, then people like actually start to call him up. People do call him up. You ask him and say, hey, look, we need a lending, we need a hand here. And that didn't quite happen. I feel like if it had lasted another couple of weeks, then he would have, you know, gone in a little bit more. Yeah,
and again, I just think a lot of things are not going to change until we get another recession, right? We need to complete this cycle before we can figure out where we're going in the next leg up.